Hey folks, welcome to a product review at Finominal. Today we're going to look at First Trust's RBA American Industrial Resource ETF, which trades on the ticker ARRR. Now, the ETF is managing around $5 billion of assets, so it has been quite successful, and is focusing on small and mid-cap industrial and community banking stocks in the US. So from a thematic perspective, this is like a fund that should have benefited of some of the economic reforms in the US of the recent years that intended to help the domestic manufacturing sector. So let's investigate if that has been the case and what makes this fund so successful. We're going to kick off with a benchmarking exercise, and we're actually going to take the MSCI Industrials Index as the benchmark index. And so what we can see over here, we can see the performance since 2014, where through most of the period, ARR has tracked more or less the MSCI US Industrial Index, but most recently, or since 2022, it has significantly outperformed. And if you recall, during 2022, there were a variety of economic acts by the Biden administration. For example, the CHIPS Act, right, that should have supported, as mentioned, industrials and especially small and more domestically focused companies in the US. Now, if you look at the ETF versus the benchmark, we can also look at what is the overlap from a stock perspective. ARRR is much more concentrated with 54 stocks versus the MSCI USA Industrials Index with 364 stocks. There's an overlap of 49 stocks, and that equates to a low percentage overlap of only 5%. We can also look at this from a sectoral perspective. Now, the MSCI Industrials Index has primarily exposure to industrial companies as expected. Also has some minor exposure to technology companies. And in contrast, AIRR also has exposure to consumer discretionary and financial stocks, right? These are primarily the community banking stocks. Now, that's in terms of some of the differences, right, between the benchmark and the ETF. We can also look in terms of what's been driving like this fund from a factor perspective. Now, if you look at equity factors, we do see consistently positive exposure to the size factor. You can see it over here. And we can also see a lower but still consistently positive exposure to the value factor, right? Versus the exposure to the other factors has been all over the place. So this portfolio, right, we already know it's smaller and mid-cap stocks, right? So the exposure to the size factor is expected, but they also seem to be cheaper on average than the stocks in the S&P 500. Now, what's kind of interesting to think about is that this fund has outperformed the MSCI USA Industrials Index. And so intuitively, we would assume that this fund has generated significantly alpha, but that actually wasn't the case. Now, the way we define alpha is as the unexplained return. And the alpha actually has been negative throughout the most period and now just turned positive. But on a cumulative basis, we can explain actually the performance of this fund quite well. Yeah, we can explain via the factors, right? But there's nothing idiosyncratic here, right? That would be interesting to look at. Now, that's for this fund on a standalone basis. We can also look at in terms of how this fund has performed versus peers. And we're going to select a couple of ones. So over here, let's maybe take the small cap industrials. That sounds similar. And also look at the industrials momentum product from Invesco. So let's move to the asset comparer, where we can look at the performance of AIRR versus those funds. And we're also going to include an ETF that actually tracks the MSCI Industrials Index. Now, what we do see is that AIRR has outperformed those three other products since 2014. Having said that, we also do need to note, right, that over the first few years, AIRR actually underperformed, right? We can see, especially during COVID, right? So the track record is not consistent outperformance, right? This is more sporadic, right, based since 2022. What's also worth mentioning is that AIRR, terrible ticker by the name, effectively has the highest fees, right? 70 basis points. The product from Invesco, the Industrials Momentum ETF, charges 60 basis points. But if you just want to have industrial exposure, you can get it for 8 basis points from Fidelity. And so fees on the higher side, it's also worth mentioning that AIRR has a slightly higher volatility, right, than the other products. To be fair, it also has a higher Sharpe ratio, right, except almost identical to the one from the MSCI Industrials Index. But most of it can be attributed to the most recent performance. So from today's perspective, right, this does look attractive, simply because AIRR has outperformed its peers, right? Having said that, it is expensive. There's no consistent outperformance, and this effectively represents thematic investing, right? And the issue with thematic investing is that investors don't tend to jump onto a theme when it is not associated with positive returns. So, for example, this, the AUM in this product was a fraction in 2020 and 2021. Most of the AUM growth has been most recently, right? And in general, mean reversion is a powerful force on financial markets. So usually what happens is with thematic investing that they mean revert, i.e. they underperform thereafter. And that's why I would be very cautious with regards to a product like AIRR, because it looks good from today's perspective, but there seems to be nothing structurally attractive about this in the sense that there's no consistent performance, expensive. So those are some parting thoughts from our side. Hope this helps. Have a nice day.